Glad to see everybody managed to have a bit of a break and a conversation. And we're going to be continuing now with the evolution of custody solutions in Web3, moderated by Matthias Klimperg of Partisia Blockchain. So Matthias, could you come up here? Yeah. Here, Matthias.
Thank you.
Now, it is our absolute pleasure to invite up the panelists. First of all, Kevin Lee, CEO of GATE.HK. Kevin? Yeah. Well, also Kevin Liu, CEO of DIGIFT. Sorry, my apologies.
No worries.
There's a fold right there. You see that?
Well, you're so small. I'm surprised you can even see it, right?
My eyes are good. It's the fold.
Thank you.
Then Sagar Desai, APAC Head of Wholesale, Coinbase Institutional. Hi, welcome.
How are you doing?
Hi, Alex Pombo, nice to meet you. And Fiona Murray, Managing Director, APAC for Ripple Custody. Welcome.
Yeah. Absolutely. Should we check if Kevin is... I think he said he's on the way. Maybe you can say we'll just get started in 1 minute.
Just wait 1 more minute for Kevin Lee to join us.
Okay, hey everyone. Thanks for joining here on a very interesting panel with some of the heavyweights from the industry. We're going to talk about the evolution of custody in Web3. My name is Matthias. I'm the head of product at Partisia Blockchain. And just to set the stage before we start here, we are very excited about custody in everything we build because it's so important how we protect our assets. And if we, for example, don't protect the custody and the security in our bridge, it's going to be a huge problem when it's going to get exploited. We are also, with some of you may know, some of the leading experts in MPC that's used in a lot of custody solutions. So we build products around that in all aspects of the custody. So let's get started. The first question is the hardest because you have to do it under less than 1 minute. I would like to introduce, yes. So if each of you could introduce yourself and your company.
Fiona, you can start.
It's always a challenge to go first. Thanks for having me. I'm Fiona Murray, Managing Director for Asia Pacific at Ripple. At Ripple, we are a one-stop shop for digital asset infrastructure. So we help organizations and institutions to move value, digital or fiat, through our global payments network, to tokenize directly on the XRP ledger, to store through our self-custody solutions, and to exchange value. We're launching our own US dollar-backed stablecoin at the end of the year. That's us. Who's next?
Sure. Kevin Liu here. Thanks a lot for having us. So Kevin Liu, CEO of Hong Kong DIGIFT. DIGIFT is a licensed RMO CMS entity. So that's we're allowed to deal in securities. We're also a recognized market operator for tokenized securities. What have we tokenized? T-bills, money market, high yield, as well as also Web3 funds. So yeah, we're also non-custodial. So once we actually issue, we are a licensed seller of security tokens.
Perfect. Nice to see you all. My name is Sagar Desai. I am the APAC head for our wholesale business for Coinbase Institutional. As most of you may be familiar, Coinbase has a retail business and an institutional business, so I represent the institutional platform. And as part of that platform, we essentially are a one-stop shop solution for everything to do with prime brokerage. So if you're sort of familiar with the traditional prime brokerage model in banking, this is very similar to that, but for crypto, which includes trading, custody, financing, staking, Web3 wallet, all within one single ecosystem, which is Prime. So I represent that part of the business, and excited to chat with all of you about custody.
Awesome, thanks. So let's talk RWA and custody. One observation we have done in our company is that the value lock of RWAs on-chain and in private and public blockchains has already surpassed the value log in DeFi. And it's sort of been an exponential growth there. And if we think about it, RWA, right, is about tokenizing all the value in the world. I think a lot of people think traditional finance because they've been more aggressive on that front because it's a superior platform technology to issue bonds, for example. Once we see all that trillions of dollars of value move on-chain, let it be private chains, hybrid chains, or public chains, custody will obviously be a very, very important piece of that. So how do you see custody play into that whole RWA narrative that's going on?
Do you want to?
Well, yeah, I guess we approach it from a slightly different angle. In fact, we've been sort of engaged with Ripple as well as also Coinbase and generally a lot of the other market players from an institutional perspective. So our licenses allow us to do effectively three things. We're allowed to issue STOs on public blockchain, not private. We're able to also run effectively a AMM smart contract DEX for security tokens. And we're also able to accept crypto in exchange for security. So I'm based in Hong Kong. Very difficult to do that, but here in Singapore, they allow effectively to do that. But unlike a centralized issuer and a exchange, we are non-custodial. So what we aim to do is allow the client to custody themselves or appoint their own institutional custodian. So I think that's kind of critical for us to be able to find further adoption and further sort of trust anchors for the assets that we issue on. So I think from this perspective, we scale horizontally. So we're fairly agnostic with respect to the custody providers that our clients choose. So it's slightly different from, I think, what the others would offer.
Go ahead. I was just going to say, I think just to sort of add on to what Kevin mentioned, from our perspective, obviously we are maybe more focused on crypto as opposed to RWAs, but we do work with some custom projects where we custody the tokens directly with Coinbase, with Coinbase's custody offering. So Coinbase has a custody offering from Coinbase Custody Trust Company, which is our sort of licensed qualified custodian entity in the US, regulated by the New York Department of Financial Services. So that probably is, I would say, one of the largest custodians in the market today, as well as, without trying to blow my own horn here, one of the most trusted custodians in the market. So I think we sort of encourage clients who work with us, both RWAs as well as crypto platforms, to custody as much as possible from a cold perspective, because that's the most secure form of custody from our perspective.
Is custody important? Absolutely. That's why we acquired a leading custody solution last year. It's been over a year that we've been integrating. Ripple itself holds a lot of digital assets, so we know the importance of safe governance and storage and rules around how you access and how you manage your private keys. So we see that as super key to unlocking widespread adoption of real-world asset tokenization, for sure.
Awesome. Okay. Again?
We need more mics.
Yes, I think we will share for the time being. Okay, so now I want to talk a bit about the challenges of custody, or here if there is any challenges. Perhaps you found the golden solution. So we tried to develop some products for custody, which is more decentralized and programmable, which we believe solves some of the issues. But very interested to hear, like in your work with custody solutions, what are the main challenges? Go ahead.
I'll go first.
Yeah.
So I'll talk about it a little bit more holistically. So I mentioned we just acquired, over a year ago, we acquired a custody solution. But what we found when we evaluated the market and we were hearing from our customers, whether they were crypto natives or indeed many of the TradFi institutions that we're working with in order to enable them to adopt Web3, that there are three themes that are challenges out there when it comes to custody. The first is, when you're getting started, it's really hard to think about infrastructure. Maybe you don't think you need an enterprise-grade, battle-tested custody solution. And that's the first challenge, knowing that you need a custody solution. And we've all seen what happens when things go wrong. So that's the first challenge, I would say. The second challenge is, as soon as that institution or that entity is starting to grow, you've already set up, you've got your core infrastructure, you're starting to build volume, and in this market, many players are experiencing that right now, it's predictability of cost. So your cost and your infrastructure should not be at the expense of growth. And we're seeing that with many, many players out there who took a fast and easy option for custody to begin with, who are now going, oh my God, my margins are destroyed because I'm actually onboarding customers now. And then I would say that the third challenge that we see out there is all around having skin in the game. So this one is a little bit harder to articulate, so I'll just share a story instead. Relevant to Token and the audience that we have here, there's a company called Futureverse. They are an AI and metaverse company. They're building and bridging ecosystems. They're doing some really cool stuff. They're building on the XRP ledger. And separately, they needed to find a custody solution because they got it from day one that what they wanted to do was have the option to safely store incoming crypto from their customers before minting it on their own auto blockchain. So what they looked for and found in Ripple at that time was an institution with skin in the game. Skin in the game meaning we have been committed to developing on-chain for over 10 years now. We have significant digital assets ourselves that we manage, so we know the importance of governance and what can go wrong. We think about it every moment of every day. And finally, we're also in this space where we're a regulated organization that's our regulated activity and our licenses around the world mean that we can't afford for anything to go wrong. So those are the challenges that we see, and having skin in the game and a like-minded organization to work with become increasingly important.
Thanks, Fiona. And I think those points are extremely relevant, especially I speak to a host of different institutional clients with different profiles. That's right. And I think some of the things that you mentioned keep coming up all the time in client conversations. I think just to add on to everything that Fiona said, from a trading perspective, I do also speak to lots of clients who are trading actively. And custody then becomes supremely important, especially when they want to trade in short periods of time. So if you have a solution that is not able to give them the right level of operational control over their assets, it becomes very hard for them to capture short-term opportunities, especially when they present themselves, because nobody can really predict when these opportunities present themselves. So your custody solution needs to be flexible enough for them to be able to withdraw assets quickly and then take the opportunity when it arrives from a trading perspective. So that's we've seen a lot of challenges around operational controls, withdrawal times in the custody space. And then the second one that I just wanted to quickly highlight is also the fact that there's a whole, when I speak to large multinational banks, there's a whole debate between whether to have a custody solution on-prem or whether to appoint someone as a sub-custodian. And that really depends on each client's risk appetite, whether they're willing and able to build a custody solution from the ground up themselves and be able to sort of launch that in the market ASAP, or do they want to rely on a partner like Coinbase or XYZ partner and abstract away the complexities of key management to that partner so that they don't have to deal with all the key management complexities that come with any scalable custody solution. So yeah, those are, I think, the two main big challenges in my mind.
Yeah, maybe just to add to what Sagar is saying, again, from a sort of issuer RWA perspective, I think what you're looking for is operational leverage across different B2B partners, and you're talking about trading, right? So it's quite clear that obviously TradFi and sort of crypto worlds are actually merging. So one of the things that we're quite keenly focused on is providing income collateral, high-grade collateral, for especially prime brokers. But then, how do you work with the prime brokers? You've got to work with the custodians. So it's either like if you work with some of the bigger sort of primes that come from securities custody, they know how to kind of do this. They may have the appropriate licensing for security tokens specifically. But if they're kind of doing crypto, they might not be able to hold these kind of income-generating security tokens. So what we're actually working on right now is enabling further custody support for the general trust anchor of accepted collateral. Then moving up to the prime brokers, because at the prime level, you can right now accept USDC, you can accept crypto, but these are non-income generating assets. And not also to say that there is an element of stablecoin DPEG risk. But if you have the actual securities, you don't have that DPEG risk. You've got access to the underlying securities. And further, you're also able to offset some of that prime brokerage leverage you're being charged with the income generating asset. Now, it sounds rosy, great, right? But then also what the element you're looking at is the sort of liquidity, right, for real world assets, not as good as crypto. So you have to place a haircut on it. From what we understand, our clients are already telling us that they would, even with the haircut, be willing to accept that prime brokerage charge to sort of accommodate for that lack of liquidity. But I think that's probably why we're here. RWA is in the narrative. We know it's kind of heading this direction. And I would argue for our friends in the custody business, enabling RWA is the way to go, because if you're purely crypto native and don't enable RWA for further use in the interoperability with other B2Bs, you may not get your funding round, right? Because banks are going to muscle in. But we're fortunate, obviously, that many of the custodian are supported by banks. It's already happening.
Okay, awesome, thanks. So now I want to talk a bit more about the tech. I hope you guys also like that part. Yeah. So there's a lot of advancements in sort of the software level with new cryptographic techniques, think multi-sig, MPC, and so on, and also on the hardware side. How does that, or does it sort of transform the custody business? Because I think there's a lot of good solutions out there which have been battle tested and they are sort of enterprise grade. Does all these new advancements actually get implemented, or what's your risk appetite and profile on this?
Yeah, 100%. As in, I think, if you're running a custody business and if you're not upgrading as the market evolves, you're sort of failing yourself in the custody space. Because obviously we see a host of different risks that keep coming up, a host of different security failures that keep coming up in the crypto market specifically. So if you're not upgrading yourself every time something like this happens, you're essentially failing yourself and your clients. How does that get implemented? How does that sort of reflect in terms of day-to-day, in terms of running a day-to-day custody business? First of all, I think it is important to bring your clients, along with you in that journey. Because every time you make new changes or upgrades in your custody infrastructure, obviously clients' operations are also impacted. So it's really important for clients to be educated on everything that's happening with their custody offering. So that's one. The second thing is there's a whole, again, I think this goes back to the point that I made earlier, which is there's a whole debate of whether you want to build a hardware solution on-prem, or you want to sort of give that away to someone else. Now, if you're building it yourself, then you need to make those changes yourself, because you will be responsible for managing the custody of your assets. But if you're sort of giving that responsibility away to, say, a Coinbase, then you're essentially relying on the security infrastructure as well as the security professionals that Coinbase hires to ensure that your assets remain safe. So depending on each client's risk profile. So for example, maybe a client who is an active trader, he or she does not care so much about custody. He or she wouldn't mind giving that custody piece to someone else. But if you're talking to a bank, for example, maybe they won't want to build their own custody solution because they don't want to trust anyone. So it depends on each client type and each client type's profile and how much sort of risk appetite they typically take in the market. Does that make sense?
Absolutely. Yeah. Kevin, you want to take a stab at this?
No, I think that we're fairly agnostic with respect to sort of what our clients actually choose from a custody. As if they're sort of comfortable with it, if they're able to sort of take self-custody, then yeah, by all means, whether they choose like HSM, MPC. What I will say though is that even when we have our own interactions, when sort of thinking about a possible business agreement between us and a custody provider, we're thinking about how easy is it for a client to effectively onboard with a custody provider as well as also us, and what's their UI and UX going to be there to work with us in being able to be on that whitelisted platform in order to be able to trade. So I'm not going to go too deep into the technology component. My view is that just UI UX, and we've come a long way.
Okay, awesome. So, yeah, go ahead.
One last point is, what I've also realized based on the many conversations I've had with different partners and clients is also the fact that, to be honest, a majority of them don't want to deal with key management. They don't like the complexity of it. They don't have the necessary infrastructure or the operational teams in-house to be able to deal with something as complex as key management. So if they are able to find a solution or a partner who can take away that complexity completely, they'd be more than happy to do that. It's just that it does take a long time for them to complete that due diligence on a particular partner or on a particular custodian, for them to get comfortable with that custodian's operations, with that custodian's ability to secure the assets. And once they have that comfort, they're willing to, outsource it to that third party or external custodian.
Okay, thanks, Sagar. I think we have Kevin Lee here from...
Okay, so all the questions now go to Kevin Lee.
Yes. Hey, Kevin. Nice to meet you.
How are you doing? Thanks.
Kevin Lee from GATE.HK. So, Kevin, I'm going to put you on the spot right here.
Sure. I deserve it. Yeah.
So we were talking about some of the challenges in custody. Could you speak a bit about what is the main challenges that you guys face around custody?
Yeah, sure. Thank you. Now, I'm coming from like the other Kevins. We come from a very traditional financial background, where custody. I was in the front office. I was in trading. I talked to settlement. I talked to clearing. I talked to compliance, IT. Custody is probably the one that I least talked to back in banking state, right? Custody just works. I mean, most of the exchange in Asia, we just have centralized custody already. It's more like an admin thing. In crypto, however, I just learned from you guys and a lot of crypto experts, custody is more like a technology department these days, instead of more like a settlement back office department. You have to put a lot of focus on technology instead of just to calculate the dividends. So I think that's the challenge, as in we can't just leverage the existing talent pool from traditional finance, which we could for compliance. Regulations pretty similar. For trading is pretty similar in crypto and in traditional finance. But in custody, I think is a new fields that we need a proper combination of technology talents and also regulatory and custody talents as well.
Okay, awesome, thanks. So Fiona, we spoke about a lot of things, and I think maybe a question to sum up a bit is how will this evolution of custody sort of enable the adoption of real-world assets, RWA?
Yeah, so I'm going to disagree a little bit with Sagar in my response.
That's great. Now it's gonna be interesting.
Where are the lights? Switch it on and off. So to just give you a little bit of context first, Ripple has been working with TradFi for a very long time. And again, over 10 years in this space is like a lifetime in Web3. I think many of you will agree to that. So what we've been doing is we've been building a global payments network. We've been enabling regulated financial institutions to use and access digital assets for real-time settlement. We have a custody solution, which is a self-custody solution, and we're leading the charge with the world's largest banks on that. So our customers for custody are HSBC, SocGen Forge, BBVA, DBS as a local bank here, and actually what we find, so we're in a very privileged position because we've got all the work that we do on the ledger and with the foundation. So we see Web3 startups, but we also see these massive, globally, systemically important banks. And we know that when they move, the needle moves. when it comes to tokenization of real-world assets. So many of those big guys are entering this space. They're starting to, they're already global custodians, and as Kevin, the new Kevin mentioned, to them, they're originally that business just runs. They make money out of it, but it's a cost center. Now, as you move into digital assets, you need to have a solid custody platform, totally new technology, in order to move into that tokenization space. And what's driving that? These big guys are moving, and when they turn on, they'll be massive. What's driving that is their customers, unsurprisingly. So their customers are asset managers. That's where the demand is. Asset managers want to see tokenization of real-world assets, of funds, of bonds. Why? Everyone in this room knows the story. Fractionalization, increased access to investable products, story as old as time, and they're pushing their custodians to enable that business. And this is going to be massive. It's already starting. So with those largest players, they do want to keep control. What matters to them is that they have control over their deployment, that they have the ability to stay within regulatory parameters, whether that's on-soil mandates or indeed whether that extends to, hey, we want to be able to control our own keys and our own key management because that's what you're paying us for. And so that's what we see with the biggest movers in the market.
Okay, that's a good segue over to another topic here. So maybe Kevin Liu, you could help me here. So some of the custody solutions, right? What I hear and what I observe sometimes is that people, they say it's nice and easy and convenient, but it's not really decentralized. Sometimes the custody providers will own maybe 51% of the keys, and then what does decentralization really means then? Also, sometimes when you use a vendor, service provider, you're sort of stuck to some standard policies. There's not so much flexibility, and could you program some rules yourself into the custody? So what does decentralization and programmability or flexibility really means in custody? Is there a real need for that, or are people willing just to sign up with a custody provider and then maybe compromise on some of this?
Yeah, I think, okay, so I'd split it out into sort of a B2C or a sort of more B2B kind of front. Our exposure is mainly on the B2B side, right? So as much as I can actually answer your question, I'll try my best. So program, like customization, I think is driven by the culture of the organization and whatever their risk tolerance and their risk committee and structure is done. No organization, no family is ever the same, right? So it has to be customized about how they do it, and also maybe their local bank, maybe their global operations. We're not a custody provider, but at least what we hear from some of our clients is what are the key features that perhaps maybe they're looking for, and is there maybe someone in our network that we could refer them to in order to be able to acquire our, let's say, RWA assets. And then the next question they will want to know is like, okay, well, that custody provider, who are they working with, right? And in the case of the primes, we're very interested to know which primes. And then the primes are going to be interested to know which exchanges, as Kevin Lee would, he sits on that side of it. So each culture there in itself, I think, is unique. And there's not going to be one size fits all in each component of that chain as it goes. So I would argue flexibility is critical, but then I'm sure there's going to be providers here that just go, well, you're not the one who's paying the bill, right? So to make it sort of completely customizable or versus cookie cutter. So yeah.
Awesome. Kevin Lee, what do you think about decentralization and flexibility in the custody level?
Well, yeah. So it's again just like it's Kevin Lowe mentions, it's like it all depends on the risk appetite, but also I think we take decentralization to a level where we have to think about like how much we can actually decentralize. I mean, a key is a key. You can stretch it to like whatever number is still very centralized compared to the actual blockchain network. And then we also talk about the real-world asset. Real-world asset, I mean, we summarized a really big category in just 3 letters, but like let's think about like whiskey barrel, like because I like whiskey. It has to be centralized, right? So there are elements where it's the token that represent the barrel. there's a relationship of the tokens and the barrel itself. And the last two, the later two, actually has to be very centralized. So what you do, when we talk about risk, there's risk on each of these three elements as well. So like when we're focusing very much on the first one, that we're so decentralized and so safe in a way that we may miss out the later two as well. So like it has to be coherent about like equally on these three elements to make it make sense.
Okay. Well, thanks everyone here. We are right on time. This was very interesting and insightful. I hope everyone enjoyed it. Let's give them a round of applause. Okay, thank you. Thank you. Thank you.
Thank you.